Close for Amazon as the company reaches $2 trillion in market cap for the first time. That move helping the NASDAQ to outperform today, up about 0.5%, closing higher. But let's bring in our market panel. Joining us now is G Squared Private Wealth CIO and CNBC contributor Victoria Green and Ariel Investments Vice Chairman Charlie Babrinskoy. Great to have you both here. Victoria, I'll start with you. Amazon, $2 trillion club. Where does it go from here?
To the moon. It's just a pit stop on the way to 3 trillion. They'll be there in no time at all, the way the market's moving. But seriously, this stock has so many revenue components and they continue to add to it. AWS ads was 11.8 billion last quarter. And then today they're releasing that new low cost direct from China to compete with Temu and Shein. And so they're continuing to look for new revenue streams. I see this stock is not going to be exponential like Nvidia, but slow and steady, continuing to grow revenues. And with the AI lift, both internally as well as on AWS, you know, they described it, that AI is being built on AWS. Basically, everybody is going to utilize it. I see this as a stock that has continued upside, and it's one of my favorite plays, long-term hold in the discretionary space. Absolutely. I think this is, again, just a pit stop on the way to 3.
For the first time since its founding in 1994, Amazon recently hit the $2 trillion market cap milestone, joining the 4 tech giants, Microsoft, Apple, Nvidia, and Alphabet, all of which are companies that are worth over $2 trillion. This is a great breakthrough for Amazon's executive chairman Jeff Bezos and its current CEO Andy Jassy, as the company became the first e-commerce company to accomplish this achievement. Not only that, but this makes Amazon the first company to catch up with the Google parent Alphabet, which entered the $2 trillion market cap club in April this year. Amazon managed to achieve this thanks to a group of factors, one of which is the company's recent growing interest in AI and cloud services. In today's video, we're going to talk about how this happened and where Amazon could go from this point. Additionally, we'll go over what every Amazon stock investor must know before they decide to buy or sell Amazon shares. So, don't miss out. But first, if you want to keep up with Amazon's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
The Amazon resurgence, how it's happened, and where the stock goes from here. Let's bring in CNBC's Kate Rooney, who covers the company, along with Amazon shareholder Stephanie Link of Hightower, also a CNBC contributor. It's good to have you both with us. Steph, I begin with you because you're the person I'm talking about who bought more stock today in this company. Tell me about it.
Yeah, I mean, I've been involved in this name for a while, Scott, as you know, but I was underweight relative to the benchmark, and I wanted to go overweight after I've done a ton of channel checks, which really shows that the momentum is continuing on top line, on margins, on bottom line. So if you step back, North America margins have now beaten for 5 consecutive quarters, and I think they're going to go from something like 4.2% last year to mid-single digits. That's the guidance. But when I look at the components of that, retail is seeing a lot of momentum, and retail margins are still well below pre-COVID levels. So I think that you're going to see that help the overall margin structure. And then, of course, you have advertising, which is growing at 24% year over year, and those margins are 42 to 43%. And as the economy remains strong, advertising certainly is a tailwind, at least the trends that they will see.
Amazon shares have jumped significantly this year, as they are up around 30%. In April, the company reported a year-over-year sales growth of 17% in its web services subsidiary, and that helped boost the stock's performance. And last week, the company's shares went up by more than 4%, raising the stock price to $194, which pushed the company's market cap to unprecedented levels. So, how did this breakthrough happen? And what might happen next to the king of e-commerce? Let's find out by taking a profound look into the company's recent projects and future ambitions. Hello, everyone, and welcome back to Investocracy.
Stephanie mentions the company getting its groove back. Let's put up the 3-year chart again, because it shows a company that lost its groove, at least from a stock performance standpoint. My question to you is, how have they done it? How have they gotten this groove back? And look, you can call this run in the stock stealth if you want. Maybe the last leg of it has been stealthy just because, NVIDIA sucked all the oxygen out of the room for everybody else.
Right.
But look at that move then. That's a 3-year chart we're showing you. You lose something and then you gain it back. And how has this happened?
I would say the takeaway, the headline, it's Andy Jassy and its efficiency. So he took over for Bezos, obviously the founder of Amazon, the face of Amazon, at a moment when it really was still taking these moonshot bets, trying to really do everything and do it well. And Andy Jassy stepped in, brought more efficiency, brought more discipline. That's something we saw across tech with layoffs. But they did a lot of investing in that sort of dip period you see there. They spent a lot on what Stephanie was talking about, regionalization, getting more efficient, making delivery faster, which was an investment cycle. They're now reaping the benefits. They're on the other side of that, and we're seeing it pay off in North American margins. E-commerce is becoming such a bigger deal for the sell side. We've talked so much about AWS and AI this year, which is still sort of an open question for Amazon. I think they're seen as a laggard behind the other hyperscalers. But when you look under the hood at e-commerce and the margin structure there, that's really what the sell side has gotten excited about. JP Morgan last week writing about how they're going to be bigger than Walmart this year. Bank of America talking about shipping and logistics really being part of the upside. So it's one of these mega cap tech companies that also gets you exposure to consumer discretionary. So a little bit of a hedge there. And I think the chart really does say it all there, Scott.
In general, Amazon benefited from the post-pandemic era as consumers became more reliant on the services the company provides. But this is not the only cause of the company's recent astonishing level of success, which has much more depth. In the past 12 months, Amazon stock jumped 52% due to the company's vast interests in new technologies and services, represented in its cloud computing subsidiary, AWS. And this is in addition to the continuous profit growth and stock buybacks, which ultimately boosted the stock price. But this recent milestone is partly driven by their rising interest in artificial intelligence. In fact, according to the tech analyst Dan Ives, a big part of the valuation boost has been cloud and AI. In April, Amazon's CEO, Andy Jassy, stated that AI has helped speed up the growth of AWS, notably raising its potential annual revenue to $100 billion, bearing in mind that Amazon designs and manufactures its own AI chips. And before that, in March, Amazon also made its biggest ever investment in an outside company, investing a resounding $2.75 billion in the growing AI startup Anthropic, after having already invested $1.25 billion in September 2023. This came to develop foundation models that support generative AI systems. Anthropic already uses AWS as their primary cloud provider, and according to Amazon, Anthropic will now use Amazon's AI chips as well, Trainium and Inferentia, to build, train, and utilize its future models. Furthermore, Amazon developed an AI assistant chatbot named Q, which Amazon makes available to businesses that use its AWS cloud computing services. Moreover, Amazon has been massively cutting costs since the late 2022, laying off more than 27,000 employees in several divisions. This sharp cost reduction policy, besides the ceaseless success in its essential business, which is retail and advertisement, increased the company's profits and captivated investors to buy more shares. Now, the important question is, what comes next for Amazon? We're going to answer that question right now and talk about what's next for Amazon stock. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Let's talk some Amazon first. I see that it's one of your favorite ways to play the AI trade, or at least that it might be a better one than NVIDIA at this juncture. Tell me why.
Well, we do think it's underappreciated, not really because of the AI component. Okay. Obviously, cloud service has a lot of momentum, but really because of the transition to professional management. They're focused on profitability on the retail side, and they're also advertising, particularly on Prime. So we see that gigantic business becoming significantly more profitable, and it trades at a more reasonable multiple. It has similar growth prospects to NVIDIA, but trades at a more reasonable multiple, and it's less of a momentum stock. So, of course, NVIDIA, we have a 145 target, so it's obviously less attractive at 140 than at 120. But Amazon is more stable right now, less of a momentum play, and we think has the fundamental value.
One thing I've thought about over the last year and a half, 2 years or so is the way the market seems to trade Amazon a little bit more kind of tied to some of its consumer focus and almost a certain degree of cyclicality that, even just the chart kind of trades like a Walmart in a way, which, I mean, maybe it should. How much of that factors into it, the strength of the consumer and the overall volume? I mean, the margins don't come from the retail side, of course, but in terms of their linkage to the economy, how important is that?
Well, we don't think that's that critical. I mean, it is oftentimes it's more, cost effective to shop on Amazon, but it depends. But we're really focused on the move to profitability. Their delivery system is much more efficient now. It's also faster, so they have a competitive advantage. So it's really not about surging sales, but more profitable sales.
Got it. Okay.
According to experts, Amazon stock's value could keep soaring over the next 12 months without relying too much on higher valuations. If the company beats expectations or analysts raise their 2025 and 2026 forecasts, the stock could rise up to $200, $225, or even $250, which is considered a 50% gain from today's price. Also, the continuous growth in their generative AI business, alongside their constant thriving cloud business, could all as well contribute to boost the stock higher. Andy Jassy stated that generative AI may be the largest technological transformation since the cloud, which itself is still in the early stages, and perhaps since the internet. He also added that there has never been a time in Amazon's history where they felt that there was so much opportunity to make their customers' lives better and easier. This is why analysts from Bank of America and Baird think that Amazon's profits and margins can see another increase for retail services, and the mentioned division could also witness a margin rise in North America to 10% by 2027, up from 4% in 2023, and their retail success is expected to remain consistently successful in the international stage, let alone advertising margin, which is one of the most profitable tools that Amazon possesses. Analysts expect to see the results meet the expectations at the very least, if not beat it, in the upcoming quarters. Higher-end forecasts expect Amazon's earnings to grow up to 18.3% throughout 2024, with some expecting earnings per share to be around $7, and 2026 forecasts even predict further growth. So basically, Amazon still has a room of potential to fulfill, and in summary, at just $193, Amazon stock remains a good buy. But what do you think about Amazon stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Amazon is. If you would like to know what companies like Amazon have been up to these past few days, go ahead and click on the next video on your screen. See you there.